Hi there. JD.com is still undervalued at the current level, based on the analyst estimates and also based on their own numbers. Plus, as you probably know, this company has some cash, quite a lot. And maybe you remember my past videos, when I said that JD.com, I make a video back then when the stock price was about $20, and I said that the stock price is traded below the cash on hand. And guess what happened then? The stock price went up over 40% and is still undervalued. Because if you look at the cash on hand, you can see that they have 36 billion, almost 47 billion, their net cash position, and the market cap is about 55 billion. Plus, you also add their profits, the market cap can go to 100 billion, or even more if this company keeps growing, as the analysts expect. As you see, JD made about 150 billion in revenue last year, in 2023, and this revenue is expected to increase even more in the future to over 180 billion by 2028. And this is amazing. Plus, as I said, they have some cash, and this is their net cash position, 46 billion. If you ignore their debt and focus only on their cash, then the total cash plus investments is about 43 billion. So it's close to the market cap. And if you look at their free cash flow, let me show you. For the last 12 months, you can see that their free cash flow, you can see here, free cash flow for the last 12 months is about 50 billion renminbi. 50 billion renminbi. And you convert this number, 50 billion renminbi, look at here, 50 billion renminbi, into US dollars, which is close to 7 billion in free cash flow, 6.9 billion. And you apply a multiple, and then you can easily see that the market cap plus their cash position can be over 100 billion. And that's amazing. So this company can rebound back to $70 as it was in 2021, $70 per share. And still, they can grow even more in the future as they expand their business. Because if you look at their presentation, you can see here their net revenues breakdown, that they have product revenue and service revenue. You can see. And then you can look at product revenue, how they make money, general merchandise and electronics and home appliance. And for net service revenue, you can see that they offer marketplace and marketing revenue or advertising, and then logistics and other services. So we can also look at their diversified businesses in a wide spectrum of sectors. Retail, logistics, which is quite important, and new businesses, pharmacy, and other services. You can also see their operating earnings. For JD Retail, they reported a profit. This business is profitable, a profit of about 9.3 billion renminbi. Of course, they reported a decline compared to the last quarter, last year, Q1 2023, from 9.8 to 9.3, but still this segment is profitable. And the other segment, JD Logistics, has turned profitable from a loss to a profit of 200 million renminbi. And the other businesses, new businesses, they are still having some losses, but those are quite important because those services, they'll provide different services, will help them to improve their main businesses, retail and logistics, to attract more users and customers. Now, you can also see their past performance for their JD Retail operating income. You can see their margins. In the past, the lowest margins were about 3% and 2.6%, but now it has rebounded to 4.1%. So this segment, JD Retail, has been profitable from a long time ago. And this is good. As long as the revenue keeps growing, their operating profits may remain the same, and they'll be able to increase their earnings, which will push the stock price even higher, back to $70 and grow even more in the future, in the long term, over the next 5 to 10 years. So that's great for investors. Plus, you can also look at their free cash flow. As I said, for the last 12 months, they generated about 50 billion renminbi in free cash flow, or $6.9 billion, and that's quite great. Plus, they also did some buybacks. As you can see, they bought back about 3.1% of their shares, ordinary shares, and they also paid a dividend. And they still have some money left for buybacks, as you can see here. The remaining amount under the company's new share repurchase program was 2.3 billion as of May 15th, 2024. So that's great. It's not that a big amount, 2.3 billion, but still it can push the stock price even higher. So when you look at this business, especially JD Retail and JD Logistics, you can see that they have more opportunities to grow those segments more in the future, as the analysts expect. And as I said, they still have a lot of cash on hand, besides their free cash flow and the long-term growth. You can see here on their balance sheet, they have 11 billion in cash and cash equivalents, 1 billion restricted cash, and 12.5 billion here in short-term investments. And besides this, their cash on hand, so if you add them up, their cash is around 24.8 billion. Only their cash. But don't forget their investments. They have investment in equity investees of about 7.7 billion and marketable securities and other investments of around 11 billion. So when you add them all, their investments plus their cash, you can easily see that the total cash is about 43.5 billion, close to the market cap of 55 billion. So this is quite amazing, an undervalued company. And as I said, besides this, they still have a lot of cash. This business is profitable. You can look at income from operations, their final net income, and for the last 12 months, 50 billion renminbi. Don't forget to convert this number into US dollars, which is $6.9 billion. So this is amazing, especially if you had bought when I made that video that I said the stock price is quite cheap, below the cash on hand. It was about $20, and now you have an increase over 48%. This is quite amazing. You can look at my channel and see my past videos about JD.com. As you can see here, below the cash on hand. I made this video back in February 2nd, 2024. And the stock price back then was about $21. 2nd February, as you can see here. $21 and an increase over 61%, quite even better. So 2nd February, and my video when I made it was published on 2nd February 2024. So that's why you have to know when is the right time to buy a stock, especially a stock that has a lot of cash and is growing, and when is the time to sell. And still, this company has room to grow. As I explained, their free cash flow, cash position, and also their future growth rate, as the analysts expect. So if you are planning to invest in this company, you can still have an upside, another double, but as I said, you also have to be aware of the risk. Because of China, especially Chinese Communist Party, they may implement new regulations that can affect JD.com. And you also have to be aware of competition from Alibaba and PDD Holdings, and of course other small players that may occur in the future. By the way, as you probably know, if you read more about JD.com, they're also planning to expand internationally. As the management said, they want to expand their JD Logistics in other countries such as Australia and Malaysia. The two parties will further explore global cooperation opportunities. Plus, besides retail, they're also focusing on pharmacy, JD Health, and of course, other businesses. They're focusing on AI, cloud computing, and they also plan to implement their own payment, network payment. So they are trying to do more things. So if you like this business, you can take advantage. Look at the upside and also the downside, especially the risk. And if you have other questions, please let me know in the comments.